Afternoon, students. Very good afternoon. Good afternoon, Sumiti. Students, welcome to the session of completion and review. This session, one class was, as you are all aware, one class on 7th March. That was on completion and review was cancelled due to some circumstances and unavoidable circumstances. And today, Sumit ji will cover the balanced part of completion and review. He would be covering, he has already covered essay 560 and essay 570. And now he would be covering the remaining essays on completion and review. Over to you, Sumichi.
Thank you, sir. And good afternoon, everyone, dear students and fellow upcoming chartered accountants. So today we are going to talk about the most important part of what happens when we complete our audit procedures. So you have completed your audit procedures, you did your substantive analysis testing, you did of documentation of test of controls, test of details. Now you are wrapping up your audit. Now, once you start wrapping up your audit, and before you are going to get the balance sheet, the audit report signed from the partner, what's the first thing which you will, what's the mandatory thing that should have with you before we sign the audit report? So we know EL would be the first thing that we will always have before even starting the engagement. Now, from EL, from engagement letter to the last date of signing audit report, I should have a management representation letter mandatory. Without MRL, if I don't have an MRL, it would be a serious non-compliance. So what is the relevance of management representation letter? Why it should be taken? Or so let us start understanding who knows the company more better, auditor or the management. So it is always the management who knows the company better. Now, as an auditor, you are going to audit any financial statement. But who will ensure that the financial statement is complete? Auditor will try its best to find out its completeness. But what if there is some asset, some transaction, which I have hidden in the books, which I have not shown in the books, kept out of the books? Can you able to find out? And I'll give you a real classic example. So we did valuation for certain companies which are insolvent in IBC companies. And when we went to audit, normally in a bank account, in a books, the client has shown two bank accounts. He had only shown two bank accounts in a books. But when we did valuations and investigation forensic for that, we came to know there are three more bank accounts opened by the company in three different banks, which has never come into the book. Is it possible that, so just imagine in a private company, is it possible that a director or a board of directors together connive, shake hands together, and they pass a board resolution and just go to any new bank that we want to open a bank account with you? This is our board resolution. This is our mandate. Will the bank open their bank account when I'm giving you everything in signed stamp by company seal? The bank will open, and bank is getting a customer, and that too is a regulated entity. But what if the company opened a bank account and deposit money from his own, and the company is not bringing that in our books? Now, why company would be opening such account? The company wanted to do some transactions, hawala transactions or benami transactions or certain transactions on which they don't wanted to pay GST, VAT. They wanted to remove the liability of tax and other things. So they were routing it as a park-in account where there were money coming in, going out. It's a shell account. Nobody could come to know that it's a third or fourth bank account in the company. So as an auditor, do you think an auditor will have any evidence to come know that there is a third bank account which has no trace in the company? Probably no. So very, very difficult to have so auditor, you can't expect auditor to do investigation. Auditor will not, I will only come to know when I know there is something which I need to audit. So there is something that only as an auditor we can check it out. Had there be some trail, the company auditor can find out. So auditor did not find it. Now, can we blame the auditor? Certainly no. Now, why we cannot blame the auditor? So while concluding the audit, auditor will take an MRL from management representation letter from the client. And there the client will tell, look, and client will confirm that, look, I provided you entire transactions of the company. Nothing has been which we know has not been shared to you. We have told you all bank accounts. We have given you details of all purchases, sales, inventories which have happened. And according to our view, our balance, our trial balance have this ABCD number of balances. So he will take ownership of all balances what you have in your balance sheet and P&L. So the assertion of completeness and accuracy is first validated by the management itself, because auditor audits the financials, but whose responsibility is to make the financials? It is the company's, it's a client. So in a client, there are those charged with governance, that is a board, and then there is a management. So the board will ensure that the management makes correct financials, accurate financials, and they are not fudged financials to be submitted. So this MRL supports the auditor that he tried his best. Whatever data has been given to him, he has actually looked at it. And if something has intentionally been hidden from him, you can't expect him to check it out. So that is something we need to understand. Now, my one question would be, let's say a management gives me an MRL and say my closing stock is X amount and my net realizable value is Y amount. Does this MRL becomes what is the validity, or what is the weightage of this MRL as an audit evidence? How strong this is? How strong this is as an evidence? Any quick thoughts anybody has on this? How strong this is an audit evidence? Anybody can think of? This is just to get you clarity. It cannot be treated as a substantial audit evidence, sufficient audit evidence. This is just a guiding factor. I just cannot rely on my audit evidence saying that, oh, management has committed, stock value is this. I don't need to apply any brains. My work stops here, and take this number and write in my file. And tomorrow somebody will ask, how did you arrive this number? I will say, because management confirmed this number. This cannot be taken as a base. Having a MRL is just a support factor. Can this stand with the witness of any legal challenge? Answer is it can't be. It can only safeguard saying that, okay, there were supposed to be two banks, client told me two banks, I'm aware of two banks. If there are four bank accounts, you cannot blame me because client did not told me. It can only help to this level. But can the company give you any assertion saying that we know this is the fair value, we know this is a stock inventory value, you just trust our value? That cannot. Auditor has to use other evidences to support this. So that part we need to keep in mind. Now, before taking presentations and slides, let me take you to one audit report, because now we need to, so today we are going to cover so those charged with governance, and then SA 265, communication of deficiency. So we just give it a minute. And then we are going to go for misstatement evaluations. So SA 260, 265, 450, we are going to touch base today. And SA 580, we have discussed last time 560 and 570. We will also touch base them today. Before we go to first part, let me take one question. If you remember last time we discussed on subsequent events. Subsequent events are those when your audit balance sheet is of 31st March and and financials are signed on 30th of April. Then what do you do? Whatever happens between 30th of 31st of March and 30th of April, any significant events happen during that period.
Sir,
What
Sumit
please
ji?
please
Yes. Yes, one student is asking, sir, by using MRL, we can question the client later in case of any mistakes and pitfalls identified.
Absolutely right. This MRL becomes your very strong argument to tell to client that look, you committed me this, you tell me A, B, C, D. Now you have given false. Now, if the client gives a false MRL, I have always right to issue a disclaimer report or adverse opinion report. Because if I don't have comfort on MRL, then whatever I'm doing is meaningless. Because see, all understand. So it is like I'll give an example, and again it's a very raw example. A patient goes to a doctor. A patient goes to a doctor and say that I'm having a chest pain. Okay, goes to the doctor, and doctor says, okay, anything else you have? He does not mention anything. He does not mention that he has a high BP, he has a diabetes, he has a past history of cardiac heart attacks. He got two, three times. He is never mentioning, or this kind of it runs in his family. He does not mention in his genetics. Now, if the doctor does not know that you are, or he does not say he is allergic to, let's say one specific thing, he is not mentioned. And then he's saying, I'm feeling pain, give me some medicine, and auditor and the doctor gives him one medicine, and then something goes wrong. The patient cannot shout on the doctor that, oh, you have ill treated me. No, you have not given fact to the doctor. Though you have given a limited facts to doctor. Based on limited facts, he will apply limited logic and he will treat accordingly. Similarly, when you are going to an auditor, you came to me for audit. You come and told me that because of certain compliances, you want to get an audit done, so please get me audit. Now, when I'm coming to audit, you need to be clean with me. You need to come with clean hands. You need to give me entire data. If you hide some data for whatever reason, and that is the reason we get a MRL saying that you have shared every details with us. Now you give me 100% invoices. This does not mean I am supposed to check every 100% invoice because it is my job. I may do on a random sampling basis or a statistical sampling basis based on whatever or certain software, whatever sample comes that I can check. But you cannot, the management cannot say, look, I give you 100% invoice. Now, if something goes wrong, you are responsible. Well, that cannot be taken against me. But I can always take this MRL as a base against the management that you have told me you have only two bank accounts, you have only these debtors, you have no content liability. How would you come to know? Now, see, understand very important. If there is a case going against a company and company has no in-house lawyer team, and company has only a legal team consultant, which normally all companies do not have an in-house legal department. And there is a significant case filed against the company. And if you are not aware, and company does not tell you, you will not put into content liability. Now, what will happen if after you signing the balance sheet, the case comes in and a huge payment comes to the company? Then it impacts a going concern. And imagine I signed a balance sheet as on 31st March 26 as a going concern. And in June 26, because of that content liability case, which I was not aware, company becomes from a going concern to a liquidation company. Will regulator, stakeholders, banks, tax department, NAFRA, will they not question me that were you sleeping when you give a going concern? So I was not aware of this. So then I can always tell that okay, management told me that these are only content liabilities. I have not any further details. So that part they need to keep in mind. So MRL will always safeguard the auditor saying that you have given me this data, and if something goes wrong, you are responsible in the first place. But again, I said that MRL I cannot take as a base. Client is told, so this should be. No, no. I need to corroborate with other evidences. If client is say committing, oh, I'll confirm you. It is my duty to cross check. I cannot take his words verbatim and rely on the work. Okay. Now coming to subsequent events. Last time we talked about subsequent events, we talked about cases, we talked about fire, we talked about various things. I missed one important point, one very practical issues which you all will face, and that is sales return. Now, how will you treat a sales has been booked? Let's say today, right now it's 18th March, and how many of you believe that in many organizations, just to get a good sales number, lot of dummy sales would be booked, or a lot of fictitious or a lot of over revenue would have been booked from 18th March to 31st of March. Do we agree that because I need to show good position of my picture of my financials, so the sales target guy, because many bonuses are given to salesperson based on completion of certain targets, and if it is a year-end target, will I expect a high revenue possible? And just ballpark we are asking, possibility may occur, possibility may occur or may not occur. It can happen both ways. So it may or may not happen. Assuming whatever happens, we have a sales booked of, let's say, 50 lakh sales have been booked between 15th March to 31st of March. The sales have been booked. You came to audit on 30th of June. You are auditing from in 30th of June for 31st March 26. And then you observe in May month, entire 50 lakh sales got reversed. What would be your stand? Anyone has a quick thoughts on this? Will it be adjusting event? Will it be a non-adjusting event? Any quick thoughts? Can it be management play around to show a higher number? Yes, no, maybe. So I'll take two, three questions from this point to understand. So one is this: we are talking of a sales return happened post year end. Will you impact? Will you not impact? That's one point. Second point, we have inventory lying in my balance sheet as on 31st March. Okay. Now, how will you determine cost or NRV, whichever is lower? Cost, I'm sure we all agree, cost is no brainer. Cost is something which you have incurred. Cost is something at which you bought. It is the purchase cost plus taxes plus lending cost. So whatever cost you will incur, that you will figure it out. So it is very straightforward, vanilla, no application of logical mind is required. So while valuing inventory as per AS2 or Ind AS 2, luckily both the AS and Ind AS have same assumption. So we will get cost. Question is how to get NRV. And the second biggest question is uh, do we have you really checked NRV in all your life cases, practical audits? Have you actually checked NRV? Yes, no, maybe. And be honest to yourself, Mother. I don't want your company's name. I just want to understand, did we actually check, or it is just in the standard, it looks good, cost or NRV which is lower, or you actually did? So especially in manufacturer companies, these are actually checked. There are bigger companies, it is actually checked. In a trading, a lot of people at times take little light approach. It is not checked. So anybody get a response on these two questions? What should I do on a sales return, and how should I determine NRV? Anyone has any idea? And best part is there is no negative marking for any wrong answer. So answer is important. Right or wrong, we all learn in the process. So let me give you my 2 cents first. If anybody is not able to give a response, first we'll take an example of NRV. How do you determine NRV? So I may consider the year end, after year end, whatever sales are happening. So let's say I have one product, X product. As on 31st March, I know the cost. Now, how do I know what is net realizable value? I may look whatever company has done sales in April month. In April month, whatever they have done sales, can we say that will give me a good indicator to know at what price I am able to exit? It will give me a good indicator. So any subsequent sales will give me a good idea to find out what is the NRV, so that I can always consider. Even though it is happening post year end, but that can help me get an idea. Now coming back to the question of sales return happen. So we did a sale on last week of March, and in 2 months the entire sales got returned. What should I do? Shall I adjust this event? Shall I not adjust the event? Anyone has any view on this? Would you like to adjust? Would you not
Yes,
like to adjust?
yes, sir. Anil Golti, first question, it is adjusting event.
Okay. So Anil, that's the beauty of audit, and that's the beauty of what we call say specific situation. In audit, one answer cannot fit all. So one size does not fit all. Similarly, one answer cannot fit all. Without knowing the exact details, any answer may not be a valid answer. Now I'll explain. Is it an adjusting event or it is a non-adjusting event? Okay. So Anil, for adjusting event, what is to be done? The condition should exist on the balance sheet date, or the condition can arise even after the balance sheet date, theoretically, and we're just taking theoretically. And I appreciate your answer, but let us understand more deep and more dwell. Now, imagine hypothetically, we are talking of a product, petrol, diesel cars. Let's say diesel cars we are talking product. So Maruti sold diesel cars as on 31st, last week of 31st March, they sold a diesel car. At that time, you as a dealer, you have taken those cars. You are not even related to Maruti. You are an independent dealer. You have taken 10 cars from Maruti, diesel cars, and on 1st May, Government of India announces now no more diesel cars will run in Delhi. Now tell me, if you return now, is this a adjusting event? Was this condition of non-diesel car or diesel car should not be used, was it existence as of 31st March? Answer is no. As on 31st March, there is no such ban on diesel cars. So now we need to say to adjust the sales return, we need to understand the sales return is happening for any condition that already existed on the balance sheet date, then it becomes an adjusting event. But if it is having on those bases which are not, but it is happening on the basis which is not happening on those events which are not as on balance sheet date, then we are not going to consider it. And then it will be just a disclosure that now onwards the product may not be sellable because of these conditions, because this condition came as on 1st May. There was no such symbol, no such signage that make this sale invalid as on 31st March. Now, say for example, I am returning cars without any reason. There is no such notification came. There is no such change came. No such Iran-Israel war happens where the price of petrol is increasing, so sale is not happening. There is no such event happening.
Sir,
Everything's
sir,
yes.
one student is saying that management knew on 31st March that they will get the sale being returned back.
No, but how management will know when this condition of first on
Because
when the condition of government banning the diesel comes on 1st May, how
no,
management will come?
no, you were giving earlier, you took one example where you said that yeah, management is regulating and management is saying that yes, for increasing revenue, they are selling from 15th to 18th March, and then they are getting back their
Correct, correct. For this,
so
this I am coming. Yeah, yeah.
so
This
management.
is when management knows. If the management knows, then for sure it has to be returned. And I'll tell you this is for some other reason, or for some other purpose also. I'll tell you. So I first complete the first example where management has no idea on central government policies, then it will not be adjusting event. But where, for example, but where, but where, for example, just a second. But where, for example, but where, for example, the returns are happening without any strong reason. Okay, if you remember some time back, there was a Euro 2, Euro 3 issue happened that all cars which are of Euro 3, 4 need to be returned back to the company. There is no such reason like this. Just the company saying, now I don't want these cars. Then it has to be adjusted because you have given a policy of sales return, which you have already a policy. So this sales return has to be considered in my adjusting event. And many places you would have seen there is a concept of quantity discount. The quantity discount concept happens what? Where you say, if you would have sold X number of cars during a year, company will give you X number of profit. If you sold X plus Y, company will give you additional profit. These are certain incentivized profits given to the companies, so in that case, the team works harder to achieve higher number. I'm sure you all would have seen certain kind of incentive schemes in all manufacturing and all inventory related companies. So if let's say my target was to sell my target was to sell 1,000 products, and I was saying, and if I sell 1,000 products and above, I will get 10% discount, and I only got are able to sell 990, and I'm not able to find 10 customers in this month. So can I told to any my dealer? So let's say if you are my dealer, then can I tell my dealer that please support me? Just give me some this one. So can I tell my dealer that please support me and just take 10 cars now? Don't need to pay actual, and just after 15 20 days return, because I will get a good price. Just give me a minute. Just give me a minute. Okay. So if I tell to my one of my dealers and say please help me out, what do you think? Can he help me? He may help me, because I will say, if you help me, then in future I will give you good deals and all. So a businessman may support me, and I may show a higher revenue. But then immediately, if next month this is getting reversed, then the auditor needs to look into it, and it becomes a adjusting event. So something which is there on 31st March and management knows it, they will do that. But fact is, management will never tell that I overbooked it to touch the profit. But as an analyst, as a CA, you will come to know when you see his sale is coming how much near to the targeted quantity. So that part you can always look into it. Okay. So this is for subsequent events. Now I'll take just a second. I'll take one file and it's audit report, and then we'll try to understand what should be communicated to the management.
The student
Rest
has
of,
answered one question.
please, sir.
Sumit Jain has answered your question. And NRV, how NRV, you asked one question, how NRV is calculated. So NRV is calculated by taking market value of stock less expenses.
Okay. So Sumit asking to Sumit now. So Sumit,
And
how will we? Yeah, please. Anything
yes,
else,
sir.
sir?
No, another student, Anil Kumar. I will tell you first. You answer this, then I will ask another thing.
So Sumit, my question was, how will you determine market price? Assuming there is no sale happened in the last week, last month. So how do we determine market price? Can you say the price I bought it is a market price? Answer is no, right? You have an inventory. You purchase something because I purchased from someone X. I would be selling always X plus certain percentage. That should be my incentive for making money. If no sales happen, how should I find a selling price? For a normal products, see, for a normal products which are in common parlance, you can easily find. Let's say talk about laptops, cars, anything which is very common product, I can find out. But what if we have a specialized peculiar products where there is no regular sale happen? Let's say you have a specialized inventory, you have specialized machinery used, you have a specialized machinery used only for certain specialized machinery used only for certain factories, mills. So their market price is not regularly available, readily available. So I'll give you an example. We used to audit, and it's a real example. We used to one audit one MNC. That MNC used to make one machine that is to be used by farmers in while cultivating the fields. That machine used to come from Switzerland. That's a very specific machine. very few farmers used to buy because it's very expensive machine. It used to come in the selling price is not less than 2 crore rupees. That's the kind of machine we are talking for, used for cultivation of farms. So only those farmers who have acres and acres of land used to use that machine. Now the company bought into inventory, but they are not able to sell it from last 2 years. So it has become a slow moving item. So we need to tell the management that, okay, in the cost we have booked it at X amount. Now we need to find it NRV. And NRV, there is no readily market available. That's a unique in India. So what we have to consider, okay, from the balance sheet date to my audit report signing date, if in during this period the sale has been happened, then that price gives an indicator of fair market value. And assuming whatever we are talking is only related to unrelated parties. If I did anything to my subsidiary, let's say if I sold those inventory to my subsidiary, then can we say it's a fair value? Answer is no. I can always sell to my subsidiary at any price because I can control my subsidiary. So this is not a fair identification of subsidiary. So that part we need to consider in mind. Any other questions that you were mentioning, Rajiv sir?
Sorry, sir. Anil is again replying on NRV part. He is saying NRV we will determine basing on based on analysis of various company sales previous performance.
Fair enough. Fair enough. So as I mentioned, the product which is common product, you can always analyze by other companies. But which is a specific product, unique product where comparables are not easily available, then you can always have to consider that. Correct. That can be always done that.
Sumit Jain
Now,
is saying that uh, we have to rely on valuation report given by a registered valuer.
I am also an RV, so I look very happy when somebody says we'll rely on report by registered valuer. But tell me, can RV give a fair value of inventory? Does for inventory you go for fair value? Does Index 2 talks about fair value of inventory? It does not. So if you go to Index 113, Index 113 specifically excludes that fair value concept should not come for inventory. Index 113 exclude those standards which already has given a formula of valuing it. So there is a difference between fair value and net realizable value, correct? So RV will not give a report for inventory. So when you say inventory, because it is not to be fair value, it is to be looked at market price. So we always look at for, and what is the best way of having market price? Somebody would have actually purchased it, whether purchase it from my company or somebody else's company. If it is the same product, then you can rely from there. But normally, and I'm saying normally for inventory, you will not get a valuation report for from a registered values, only for inventory perspective. But yeah, for others, you will always get for others. Now, so I'm sure you all would have seen a para in audit reports in sometimes in some firms, some reports, emphasis of matter paragraph. We write emphasis of matter. So we want to mention certain things to highlight the importance to the reader. So we are putting it. So read something. So someone has written like this that as per the consolidated financial statements, you have negative net worth losses. You losses of 111 crore 27,159 lakhs. That's the kind of loss we are talking. My net worth
Sir,
has become negative.
sir,
Please,
before
please.
we move ahead, one more question is there.
Please,
Anil
sir,
is
please.
asking, Anil Kumar Golti is asking, sir, could you please guide us? How can we judge whether the profits are overstated or not? How to catch out these things? What all factors do we need to consider?
Okay, okay, fine. So before that, first of all, Anil, what needs to be done is when you do any audit, how do I know the current year numbers are making sense or not? How do I know? By comparing with the previous year numbers. So the first thing one should do is doing a variance analysis. There's a concept called variance analysis, and I'll give you a real example. So just to give certain context why I'm saying all this. So I got ranked in, I got a gold medal in C Inter, and in audit I got the highest marks. When you got highest marks, and I'm talking somewhere at, I got 90 or something at that time, and I got ranked. So I was on cloud nine. Like, you feel yourself to be, you are the best expert. Okay, and that time I was an intern. So I went to audit a company, and I audited the entire company. And very confidently, I presented the file to my boss. So my boss is a 60, at the time he was 67-year-old chartered accountant, 67-year-old chartered accountant, and he was not tech savvy. No? He has never worked on computers. He was, and I'm talking of 20 years back. So he was only on pure file numbers and papers. So he said, okay, Sumit, you did your audit, give me a variance analysis. So I thought, what is variance analysis? Just compare current year number, previous year number, do a differential and compare what is the percentage movement happened. And I knew Excel, so quickly I did this, presented the file. I spent a month at the client's place. Okay, I did audit for a month at the client's place. He looked at the file, 10 minutes he did a variance analysis, what I submitted, and he said profit is overstated. And it was like an indirect slap on my face there. And I was thinking, he has not even been to the client's place. He has not even discussed any point from me. How can he say profit is overstated? And that was actually a shocker to me. And I started reviewing the papers. I still could not get it what he's trying to figure out. And then he said, look, why profit is overstated? And then he gave various reasons. So one of the reasons was, he said the bank balance FD was same. So bank balance FD, at the time there used to be UTI mutual funds and other investment funds. He says the bond amount is same. Earlier it was 10 crores. This year it is also 10 crores. Last year your profit was, let's say, 90 lakhs. This year profit you are showing 99 lakhs. So you cannot, when my interest is same 9%, it cannot have a higher number at all. It cannot go. So client has done some mischievous things to show a higher profit. So he did some calculation adjustment errors in system and get a profit 99 lakh. So in 10 minutes, he find out what I should have done while what I could not even find by spending 1 month at a client's place. And that is called the power of experience. So more and more he look at. So first, what always needs to look at it is, what is the sales happening? So if 1 to 11 months, sales are happening at a very low speed. And in the last 12 months, when the year end is happening in March, suddenly sales skyrocket. So there could be, then I'm not saying every time it is a fraud, every time it's a management adjustment. Sometimes there could be stock because I want to finish my closing stock, I could give a discount. But then I need to see, is this sales, am I doing to my related party vendors whom I have never sold during the year, or the sale I'm making to those vendors with whom I've never done any transaction in the year. See, there are certain vendors who will not take hanky-panky transactions. They will say, let's say, if I'm selling to Tata's, Birlas, they will not enter for any adjustment. They will not say, no, no, to help you get a higher profit, let me buy. They will not do any such kind of accommodation. So I will not. So you need to see whether the sales have been made. Are the buyers, are the seller, are the buyers are genuine buyers, or a new buyers have crop up in the March. So that part you need to see. Then you need to also see post year end what development happens. And if you can see post year end, all sales have come back, because when you do an audit, you have a good 3 months vintage to see. Normally in audit, we start audit in July, January for private limited companies. Only for a listed, we go in April and May, but for others, you have luxury of time. So you can always validate from those data whether the client has actually did some adjustments in that you'll see in 3 months. If some adjustment has done, then we need to get it reversed. If the client does not agree, then we need to put qualification that the revenue seems to go overstated. So that is, you need to check out. Second, you need to always see, so when you do a variance analysis, you will see comparison that last year if my sales was 100 and my marketing cost was 20%, this year if my sale become 300 and my marketing cost is only 2%, then something is wrong. Then something they are not trying to book. So you need to ensure that higher the sales, marketing cost should also increase to some extent. That part you need to see. And then you need to see if there is any provision for slow and moving inventory has not been made. Many companies do not make a provision for slow and moving inventories. That part you need to keep in mind. That part, because it is client will always say, if I put low value, it will give me low value. I will have a problem with bank limits. So that kind of issue we need to see, because if you are not making provision, it will show overstated. So that part you need to see. And the third part, which is most important to understand, can a can a companies in same product, same margin, can they have net profit totally different, or it should be in the same range? Take example of Infosys, TCS, Wipro. I same IT companies. So if you see whatever will happen in one company, and we are talking of industry wide, same thing actually will happen in similar other three companies, because that's the nature of that trade. It cannot happen. I'll give a classic example. You all know that a new wage code has came in last November. New wage code, a lot of new labor code we talk of. A lot of discussions is happening on various places on new labor code. It came a lot. Now, when it came, ICI issued advisory that all companies, all auditors need to look into this. And in a December quarter financials, who are giving a 9 months disclosures of limited review LR reportings, in December quarter, this needs to be factored. Okay, you can go and check the balance sheets of all these three companies: Infosys, TCS, Wipro. All companies have incurred a hit of approximately not less than 1,500 crores, or 15% in the net profit, because of this labor code. So if Infosys has done this, TCS has also then Wipro has also done this, because the nature of industry is same. Generally, accounting policies are same, so they have to bear this loss. Now, so to know whether my profit is overstated or not, it cannot happen that the entire industry in which I am working, they are making 8% net profit and I am making 20% net profit. Then something is something which I am missing, because is the other businessman fool that he don't know how to make good profit? No, he is also a smart guy. He is also running the same business. Okay, one of the year you can outshine others in one of the year. Do you think continuously you can outsmart entire industry? You can't, because information is now available to everybody. Gone are the days of secrecy. Now, do you think any business idea is secret? No, nothing is secret. So if my profit is looking like outlier, then you need to actually see it, whether it might be some adjustments that are happening. So that part, how can you that you can find out how is the profit is overstated. So wherever the management becomes too conservative, now conservative system does not work in. If somebody is becoming too conservative, that means the profit is trying to be reduced. So we need to be very fair. We should not be very aggressive, and we should not be very conservative. We need to be fair. Instead of seeing what will result in number, that is immaterial. The number will take care of itself. We need to take care of the process as an independent person. Any other pending questions, sir, before I move to one of the typical discussion?
No, sir, not yet.
Okay, sir, thank you.
Yes, sir.
Now, imagine, so we all need to we all would have seen an emphasis of paragraph in various audit reports. Now, last time we discussed on going concern. So going concern is if my company is if my entire company is negative, my balance sheet is eroded, can we still show a going concern? Anybody can answer this? If you see in this note 1, we are mentioning that I have a loss of, and see what is the quantum of loss. 11 lakh 27,159 crore. 159 lakhs. So we are talking a lakhs and loss into lakhs into lakhs. It's a huge loss we are talking. Now, if I have this much of loss, okay, if I have a loss of 100, so it is almost, if we talk of crores, it is 1,127, uh, 11,271 crore loss. That's it, 11,271 crore loss we are booking, and my net worth is absolutely negative. Still, I'm showing it as a going concern. Right, wrong, what is your view? Anyone has a view? Is it right? It is wrong? It should not be on a going concern. It should be on a liquidation basis. What do you think? If you are an auditor and you see a balance sheet totally eroded, then will you be scared to sign this as a going concern? Will you not be scared that going that for next 1 year company may or may not survive? How should I give going concern? Or you will just blindly give liquidation basis? We'll say company is not a going concern. Anybody has view on this? So ultimately, who is to take care of the company? It's the shareholder. And if there is a company which is backed by government and the government is giving you assistance, say for example, take example of Air India. Air India was in losses since a lot of time. Okay, but did the balance sheet of Air India shows it's on a liquidation issue? It's not a going concern basis. No, Air India was always shown as a going concern basis because the government has given a guarantee that wherever a shortfall will happen, the government will take care of it and we will fund the money. That's what we will do. So similarly, in this case, the company is getting a regular government assistance. So the government has said we are going to give grants to you, we are going to fund to you, and that is you have received that later support. Then we don't need to worry about it. Then we can always take that as a base and see that. Let's say I am a shareholder of this private company and I give this kind of commitment to you. Will you only rely on my commitment or will you do some test check on me? You also need to see the person giving a commitment. Is he solid enough to fulfill that commitment? See, can an individual fail? Individual can always fail. I will say, oh, I give you a commitment today, but I
So,
fail.
Mr.
Can it? Yes, sir.
So, Mr. You were asking the question. Now the students have replied. Two students, Anil again, he's saying right because it has its parallel assets more than this loss.
When you say parallel asset, Anil, where do you see the parallel assets? Well, that is not in balance sheet. How will you say parallel
Yes.
asset? When you say parallel asset means, little bit interesting point, parallel assets.
Student means to say that it might be having more assets in the balance sheet.
No,
Balance
no,
sheet might
when
be strong.
no, Anil, that does not happen because if the balance sheet would be strong, my net worth would not be negative. If my asset side would be more. So what is happening is I would have incurred continuous losses. Now, it may happen that I may have a unique asset in my balance sheet. That may happen. That may happen. I have a huge monopoly. I have a huge patent. Then I can do that. That makes sense. That does make sense. But when we say parallel asset, it does not mean something is outside my balance sheet. That cannot happen. What happens is when my shareholder is very strong and shareholder says, you like take example of research companies. A research, you do 100 research, then only one research will be successful. So you incur a loss for 100 research. If the person is willing to fund this research, then company will be on a going concern basis. So when somebody is committing that I will continue to fund you, you just analyze that person net worth. You analyze the person is also example I gave you. If I give you a commitment to my company that I will fund my company in future, you just cannot only rely on my commitment. You need to also check what is my net worth. Suppose the company needs 10 crores to survive and my net worth, my balance sheet is showing only 5 crore as my value. So who will fund the remaining 5 crore? So then you need to question. But in this case, the government has given this guarantee. So the government has said, I will give you this guarantee. So they are okay with that. So then they're okay. Then they give an emphasis that we have not reconciled, company has not reconciled 26 AS. You know, this, it is mandatory for auditors now to check what is coming in 26 AS. Has it been verified or not? So that is need to be reconciled. Then just confirmation is fine. if the significant government loan account confirmation is needed, okay, just a second. That is fine.
The Sumit,
So this, please, sir.
Sumit Jain has answered that same question. Sumit Jain has answered minimum for 12 months period has to be going concern.
Absolutely correct. So this is the minimum runway the auditor has to look that whether the cash flows which company is projecting, whatever gap is coming, can this be funded for at least next 12 months by the respective shareholders? If the answer comes yes, then only it makes sense to continue. Okay. Now I am sure you would not have seen this kind of balance sheet generally, this kind of audit report generally. So let us see what all he is giving an issue. Okay. Now you tell me, if you were an auditor, what would be your stand on this? So the auditor is saying, in our view, company is not adequate, books of accounts are not maintained adequate and satisfactory. Uh, Talking of books of accounts, I'll just give you one point to understand. We are auditing one. We were supporting one MNC in audit. There is one MNC company. Now, now I'm sure you all will agree. Nobody maintains manual books of accounts. Everything is in system. So a company is maintaining SAP as a ERP software. So in SAP, they are maintaining the accounting system. So this year, the question came whether the books of accounts are kept in India or no. What do you think if I'm maintaining books of accounts in SAP and the SAP server is in Germany? Is the books of accounts maintained in India? Yes, no, maybe. What is your view? Any quick thoughts you have? I'm maintaining in my SAP. SAP server is in Germany. The question is the books of accounts maintained in India? Yes, no, maybe. Again, these are certain integrities that we need to understand. So technically, the server is not in India, technically. So the company argument was, we can access server any place of in the world, so that is fine. It should not be a concern. The auditor concern was tomorrow, if you do not pay SAP subscription, because this is a license, you need to renew license every year. If you do not pay SAP subscription, will we get the access to the books? The answer was, then you will not get access to the books. If you do not pay software fees, do you think you will get an access? You will not get. Then how did they address the situation? They say, okay, then write in a report that the server is located in Germany and the company has downloaded all the softwares backup in India, and anytime it can be reload and access it. So then the question was sorted out. So at times you need to understand the law in detail, because that's a very confusing question. Shall we consider it as in India, outside India, books of account maintained in India? You are punching in India, but where the books are getting stored? In Germany. So if I can have a backup, 100% backup in India, that will be considered as books of account maintained in India. Now here the auditors of the view that they have not maintained adequate and satisfactory books of accounts. Now, if the books and accounts is not maintained adequate and satisfactory, the audit will not give you the result. Then they mentioned that many places accounting policies are not in line with Ind AS. Because if it's an Ind AS compliant company, your policy should be cannot be cherry picking that I will choose only policies which I like. 100% it has to be in compliance with Ind AS. Non-compliance with Ind AS, so whenever there is a prior period error, it has to adjust it in the previous year. Current now in Ind AS, I cannot have a prior period error issue. So if it is coming prior period error, it needs to be adjusted in the previous year. In terms of share application money pending allotment, it needs to be allotted. The company has not made consolidated cash flow, that is fine. Just a second. Let me tell you some important points. Then they
Yes,
give
sir. Sumit is saying that data backup should be in Bharat.
correct, absolutely. If the data balance is in Bharat, that is
And Anil is saying books of accounts deemed to be maintained in Germany.
deemed to, yeah. So if I can demonstrate the backup is with me in India, it is saved in India, and when needed, I can access that backup in any other system and I can get the data presented, then it is fine. Then I can always safeguard it. Because if the books, because you do accounting here, but if the resource repository is not saved in India and I cannot access in India, then it's a challenge. And nowadays, just to give you an example, I know certain companies, and I'm talking of big MNCs, they maintain their data in three different countries, and I'll say three different continents. They will not keep data in only one country. They'll keep in one in Ireland, one in Canada, one in different Middle East somewhere. Why they keep one will they will keep in their own country, one backup, two other backups they will keep in two different countries, and especially two different continents. And why they do that? The reason, the logic is, suppose something happens. So take an example of Iran and Israel. Take an example of Iran and Israel, and we all know what happened in Iran and Israel. Now something started by Iran on Israel. Now, does only these two countries are impacted, or now we have Dubai, Bahrain, Qatar, Kuwait, Oman, all these get impacted. So if any business BCP planning requires, if I have a different database at different countries, I will be secure. Because some way government stops cut internet from everything, then I cannot, my I'll get stuck. So if my data is at some two other different places, it is much more considered. These are done by, obviously this involves a cost, so cannot done by every company, but bigger companies. Now, if you see the property plan, so we all know as per Indians, we need to maintain properly. That has to be
Sir,
prepared. Yeah, please.
Sumit Jain is asking, can management provide explicit and unreserved statement in case of any deviation from Ind AS in this case?
No, they cannot. You cannot. It cannot happen that out of. So it cannot be like. It cannot be like majorly I am compliant. No, then you are non-compliant. I'll give a very classic example. Those of you who understand NPA provisioning will know. I'll give a very classic example. What does RBI says? What does RBI says in India? That if I'm making a NPA, then I should stop accruing interest. That's a RBI policy. Nothing right, nothing wrong. It's a RBI policy. We need to honor the policy. So one of the NBFC is honoring that policy. Okay, RBI mentioned do not make any interest on NPS. I'll put it. Now, what does NDS says? What does NDS says? NDS says, let's say there is a loan you have given to somebody of 100 rupees loan. Hypothetical numbers. Let's say you have given a loan to somebody of 100 rupees. And now 6 months happened, he's not paying you, it is an issue. So you made a provision of 75 rupees. So you made a provision of 75 rupees on that 100. Now, shall I book interest income on 25 rupees? Shall I book interest income on that 25 rupees in my books as per Ind AS logically? RBI says no. RBI says do not do that. What is your view? Does the standard says we need to do it? Does the standard say I should do it? So standard says you need to do it. Okay. So one of the NBFCs were not doing it, thinking that it is leads to overbooking. Why should we book when RBI is saying no? So they did not do. So they wrote, we have complied with all policies and we are not complying with this policy. Auditor qualified the book saying that this is straight non-compliance of Ind AS 109. The company need to book or interest on good portion of the remaining assets. So just by saying I did 9 things good and missed one thing will not safeguard me. Then it is a non-compliance. When we say explicit and unreserved statement, it means 100% I am committing that I am complying 100% on Ind AS. So that part we have to take care. So, so a materiality concept does not come here. That 10 out of 9 things I have followed, so it's a good Ind AS financial. It is 100%. So it is a binary event. Either you are fully compliant or you are not compliant. There is nothing major in between. So that's a very strict rule of law. Again, Whether it is right, I may tell to your side that okay, somebody has taken 9 things out of 10, at least give him credit. But standards are very skeptical. They say no, if he has not followed 10 out of 10, I'll not give him consider at all. So that's the way it works in. Now, impairment needs to be done, so that has to be factored. So whatever has not been done, it needs to be qualified, and that's what they have mentioned this, that whatever concerns they mentioned here. Then let me take certain concerns. CWI is a very important point. Just remember one point when you are auditing: if you have an intangibles work in progress, you mandatory need to do an impairment assessment for this in Ind AS. They put on capital advances, inventories. Okay. Now, now see, very important point here. I was just talking of inventory to you. See this qualification. As per the management, company has valued inventory at cost, which is in contravention with Ind AS 10, Ind AS 2, because we need to value at cost or NRV, whichever is lower. So I need to do this assessment just by saying, I believe market is good. No, no, market may be good, but you need to demonstrate on paper to auditor that, okay, my purchase price is this and my recent selling price is this. So it is much above the NRV cost. So there is no loss need to be booked into it. And that factor need to be done. And if they have not put in, then you need to mention, as they mentioned that something which is old, you need to make a provision of discarded inventory, which they were not making. So you need to understand that. Again, in terms of trade receivables, when you talk of trade receivables, we need to ensure delay the, let's say if I have debtors and one debtor is not paying me from last 2 years, one is not paying me last 5 years. Can I consider both at same level? Answer is no. You need to make provision separately. You need to look into the numbers separately. So here's a question on trade payables. Here's a question on cash and cash equivalent, that we are not able to get certain reconciliations. Okay. Here's a question on other assets. Now he's saying company has given advance to employees, but it has not been provided to us. Okay. And then he has given a lot of questions on various questions. I'm just giving you how big the list is. Security deposit details not available. Trade payables details not available. Tax payable on sale tax are not available. Employee benefits, they have not made a provision correctly. Actual valuation has not been done. Gratuity has not been provided. They have made a prior period adjustments in profit, which has not been provided to us supporting. So many such things they have mentioned. Non-compliance with MGT records. They have not adopted books in various circular. So all this has been mentioned. Now, if you are an auditor, what would be your opinion? Qualification report or an adverse report or a disclaimer? Give me your answer with your best view. What will you do? Qualification you'll give it adverse or give a disclaimer. By seeing all this observations as a stat auditor, what would be your view? Sumit or Anil, these are the only two people whom I can expect at least to give your quick view. If you've seen all these qualifications, what would be your stand? You made all these observations, and these are almost uh, 28 observations or 23 observations. These are 23 observations which we observed in one audit, and we have seen various other issues. So, what would you like to go ahead with? Qualified opinion, disclaimer, or adverse opinion?
Sir, before that, Anil is asking, sir, could you please guide us as an auditor? How can we consider the commitment given by the government while judging the going concern aspect?
Okay, very good. So, so now, uh, Anil, so there are certain businesses which are
In the meantime, they have given the answer. Sumit is saying disclaimer of opinion. And Anil
Okay.
is saying qualified opinion.
Qualified. Okay. Okay. Anybody else? Anybody else has a view? So both have given answers, and actually both do not qualify as the right answer. But still, thank you for your answers. Now we will be going and issuing a adverse opinion. So just to give an idea, this is an adverse opinion issue. I'll tell you why. So they have given an adverse opinion, and then we have given a reason why we are giving an adverse opinion. Now see, errors may happen many places, mistakes happens many places. But now you tell me, first of all, disclaimer is when you don't have any records, you have no data. Let's say I'll give an example. You are going to audit a client, and that client is rated by Enforcement Directorate, Income Tax, CBI, or they have rated the client, and they've impounded all the books of accounts. When the raid happens, when the fraud search, Benami or FEMA or ED, Enforcement Director comes, they take away all your records. Now, the records are taken, you are not going to audit at all. You can't audit anything because you have no data. So then you will give a disclaimer that I don't have no data, so I am not able to commit anything. So because then you're not saying good or bad, you're saying I have not been provided anything by management, so this is I'm not able to conclude any opinion. Qualified and adverse differences, is the impact pervasive and so material, or is the impact is the errors nominal, or can be okay, but not so very important that it can shut down? Answer is it is the impact is very, very significant, pervasive and material. If you're not able to have proper inventory valuation, so you did inventory, but you have not done a proper inventory valuation. You did not make fixed assets accounting, you did not make any other things. So various other things you have not maintained. So that will go into adverse. So this will go for adverse for sure. Now coming to the question, how should I assess the government? Okay. So one rule is can we expect government to fail? Answer is we cannot expect government to fail in honoring our words. Say for example, when the RBI governors write his signature, I promise to pay the bearer rupees 5, 10, 100,000, 200, whatever note it is. Can we expect that tomorrow the signature may not be valid? Answer is no, because this has a legal backing. In none of the case, the currency power can go up. Similarly, though the government keeps on changing, irrespective of the government is of BJP, Congress, or any other government coming in, or whether the government is in state or central, that does not make a difference. When the government is committing, so what happens? There are certain projects which are loss making on day one. So I'll give an example when somebody should start a plane. Imagine when planes would have started. Do you think the government knew on day one we'll make profit? Answer is no, because they know it requires a huge capex, it requires a huge development expenditure, and not all people will use it because flights tickets are expensive. If I need to take a flight from Jaipur to Delhi and it is costing me 9,000 rupees, and if I take a bus from Jaipur to Delhi, cost me 900 rupees. Majority people will prefer 900 rupees. So if I'm very, very filthy rich, I don't mind, then I will go and take 9,000. But we are talking of normal people take 900. So the customer flying plane will be less. So initially it will be in losses. Tomorrow, let's say one private player comes up and say, okay, I will come and start. Take similar example with highway projects. If I make an highway project, do I get a revenue now? So take it, if anybody would have been a highway from uh, Delhi to Jaipur or Mumbai to Pune or Delhi to Yamuna Express. If you've been on this highway, are these highways very good? These are very clean highways. Does when a company puts or anybody been to Bombay Highway, Mumbai Highway, we have it from Mumbai, ceiling, worldly ceiling. If you see these link bridges we have made, does it involve huge crores and crores of rupees? Crores and crores of rupees are involved in this. Do you think in first year I will get a benefit of it? Will I get enough people trafficking would be give me toll charges? Answer would be no. It will take years and ages. So in some places, government steps in and the government says, okay, you put 60%, I will put 40%, I will give you my 40% upfront, you start putting money there. Wherever there is a gap come, I will give you funding. So in case of like, so this the company which you are talking is of electricity company. Now you know all electricity has been moved to privatized by all state. Earlier it was electricity board in each state. Now, as per regulation, government, all companies have all electricity have able to separate distribution company, generation company. Now, if it has become a company, it has to remain with the government budget. So the company will be remain in the government name, and that is the reason why, we will rely on the government trust. Uh, can government fail? 1% probability government can fail. I am not saying government can never fail, but considering India government can be failed, considering India ecosystem, we cannot fail. But had in the past governments have failed, so you all would have heard a name called pigs. Have you ever heard pigs country? Anybody heard pigs country name? So acronym is used as pigs. So Portugal, Italy, Greece, Spain. These four countries have actually become bankrupt at one point of time. I'm talking of 2000 somewhere across 2005. At the time, these companies become bankrupt. They don't have enough money. So then it becomes a huge challenge. So it does not mean that you are a country you start pumping, printing your own notes anytime and then do that. That's cannot be done. So because of this, it becomes a huge issue. And but in India, can we say government will fail? As of now, we can never say because the kind of check system we have, because of central state power is balanced both sides, so it will not fail. Theoretically, it will not fail. Okay. Now let me start on basics. So we have covered majority of things. And in the middle, you have any questions, feel free to again uh, put it. I'll Now, as I mentioned, when we go for completion and review, now can so what is the expectation of an auditor? I need to communicate and communicate to whom? I need to communicate with those charged with governance. So generally, who are those charged with governance? So governance of any organization is done taken care by board of directors. So who are so not necessarily the term board of directors. Anybody who is controlling the overall policies of the organizations, who is on the top of the organizations, will be one who need to, who is considered those charged with governance. So I need to communicate to them. Now, what you need to communicate? You need to communicate significant audit findings. Let's say, let's say you have a policy that smoking is not allowed. Let's say you have a policy smoking is not allowed, and during the stat audit, you saw two employees smoking in the office premises. Okay, during the office hours. Now, will you go and tell this to the board that sir, your policy is not being followed? Your employees, you had a policy smoking is not allowed, and I saw people smoking. What is your view? Will you tell? Will you not tell? Anyone view? So I know smoking is injurious to health. I understand that, and I also follow that strictly. But the question is, will you go and tell to the board that your two employees' liver may go in damage, so we need to save their livers, or you will not tell? I will only tell those audit findings which has an impact on financial position of the company. This behavioral issues, I am as a stat auditor, I am least bothered. This can be considered internal audit. So if internal audit has a policy that people should not smoke during their office premise, so that means you are violating a policy. So that means you put a control is not effective. So that can be considered in internal audit or any other behavioral audit or any other staff audit, but not in it should not come under reporting to the board because it is not a significant audit finding. Now you need to tell the board what challenges you are facing. Suppose there is certain so So many of you, I'm sure many of you would have actually gone to an audit. Did you ever, have you ever find out any observation? And I'm just asking to you, just answer if possible. You would have find out some observation. And does it happen that the person who did the error, he comes and approaches you and requests you, please do not put this observation, otherwise I will lose my job. Does it happen? Yes, no, maybe. Does it happen with anybody where you would have find out some error, some observation, to discuss with the accountant, and the accountant would have come to you that please don't tell to my boss, I will lose my job, I will lose my bonus, it will have a negative impact. बॉस तो ऐसा होता है, फिर आपको भी लगेगा हाँ यार मैं भी आर्टिकल हूँ, बॉस तो ऐसा होता है, चलो नहीं बताते. कभी ऐसा हुआ आपने? बी ऑनेस्ट टू योरसेल्फ. कभी ऐसा हुआ यू डिड सम ऑब्जर्वेशन फाइंडिंग आउट एंड ऑडिट the accountant will come to and say, sir, please hide it, sir. मेरी जॉब चली जाएगी सर. तो मेरी एक फर्स्ट एंड लास्ट गलती है सर. नेक्स्ट टाइम आई विल कीप टेक केयर ऑफ इट. व्हाट इज योर व्यू? व्हाट्स योर व्यू? Now there are certain kind of errors which are intentional and unintentional errors. There are certain kind of judgments. There are certain kind of so uh, uh, wrong accounting entry happened. I was supposed to book an entry on 18th March 2026. By mistake, I did on 18th February 2026 or 18th February, 18th March 2025. Due to change of dates in SAP, I was not able to put the right year and it went to wrong year. It may have gone into previous years. Intention was not to defraud. Intention was to defraud. The error was there. Thus, it is a very significant audit error to tell board, maybe or may not be, seeing to the context. But you observe somebody stolen 5,000 rupees and it is visibly clear he has fraudulently claimed double expenses, produced fake bills, and you have found it out. Is it something need to be disclosed? This is something need to be disclosed. Because where it comes to integrity, where it comes to character, where it comes to the fraud has no materiality. And if the higher the fraud done by higher people, more disclosures, more communication needs to be done. That needs to be discussed. So you need to give us significant audit findings, all major audit findings which are very, very severe, which need to be, which you understand that as a board, the board should know these are the problems and challenges you are facing. This is the company as a issue. Like for example, content liabilities, debts, taxes not being paid, that all need to be mentioned here in significant audit findings. You also give an independent audit declaration, independence declaration that you are independent, of the company, and there is no such influence biasness on by the management. So that way you are free to give the free opinion. It should be continuous two-way communication. The board should you should meet the board and you should communicate with the board on every quarterly or 6 monthly basis whenever you meet, and tell what are the issues, what developments you want, what suggestions you want to give to the management, that you should always give. Now, so 260 talks about we should communicate to those charged with governance, which is generally the board and management. Now, control deficiencies are so my as a stat auditor, I will always audit by looking controls. So when you see controls, so let's say the control concern, concern or not a concern.
Sir, Anil is saying yes, during internal audit, it happened to me, sir. And
Correct. Yeah.
Sumit is saying yes, I came across that type of situation.
So again, I said, shall we ignore? Shall we not ignore? You leave to your conscience. If you think error is one time, the person is fine. And since I'll tell you very, and it's a real example, okay? And it happened with one of my very close known. So it is not. I'll tell you. So there was one accountant, and it's a MNC. Company was in Mumbai, and the head office was in Mumbai, and the branch was in Jaipur. One of my very close relative were auditor of that company. So the accountant, because the head office used to be in Mumbai, there used to be an accountant there, and it's a big MNC company. Accountant used to appear to be very soft spoken, very nice, very humble. Always stay from morning 9 o'clock to evening 9 o'clock till the time auditors are there. Do not ever take used to leave any leaves in during the year. Even if he is sick, he will come and sit in office. He will cough and all, but still sitting in office. And everybody presented he's a very holy guy, very simple guy, very no nonsense guy. And everybody was praising him, very good guy, very good guy. And every time you ask something, he will try to give in a day whatever is needed. He'll try to give that. So earlier, if you remember, in India before we have GST, we used to have VAT. In a VAT, we used to have CST, Central Sales Tax. So this company being in Mumbai, we has to have some CST challans. They used to make payment to central VAT authorities, and he used to give challans by putting into that this is a challan I paid. He used to withdraw cash from the company, deposit into the central government account, and get a stamp registered and all, or put a check. He used to get it done. But then one audit order came, and that's why we say always change the audit team once. A fresh blood, when he looks into things differently, would have a different idea. So the auditors, for some reason, the auditor said, "Let me go to the bank account and check how much payments are being made in bank account of this account." He went to the bank account and he saw no such transaction was done on this CST account. Now, when we saw what was happening, the guy will take a check from the company and say, "I'm depositing it to CST account." He put CST and take it out from the company. He used to get a challan stamp printed from put a round seal stamp from the SBI also. Now, how easy is to make fudgy stamps, you all know, right? It is not rocket science. I can go to any shop vendor and make it stamp. The account name was showing CST, 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 and it was not going to the government account. The funny part was his wife name was Chandra Sulekha Tiwari. Okay, this short form becomes CST. So he used to make account in the name of CST, and the bankers knew it is Chandrika Surat Tiwari, and the company thought it is a CST government account, and they were paying. In 6 months, it was a 64 lakh fraud was found out, and I'm talking of 20 years back. And then he has been taken to police and all, but money was not recovered. Now, can we say this kind of error is one of should not be? No, this is a fraud. If something goes wrong in here and there entry, by mistake I made payment to two vendors. If if I made payment to vendors, two vendors I made a payment. Now same vendor I made paid twice. This could be an error. This is not an suppose it, so it happens in a Tata group, it happens in a Tata's, which is in public domain. In the morning, one vendor was paid double. Where I say double means he was paid 2 zeros extra, because they used to have certain laptops where instead of single zero, double zero was to be there. So instead of paying 30,000, they paid 30 lakhs. That was being paid. That's happened. It happened in the morning, and in the night, the extra money was refunded. So can we say it is a fraud? It is not a fraud. It is not a fraud. It is a error, because money came in the evening. But if it becomes a regular practice where I start giving it to my friends, my known vendors, and after 1 month I take recovery, then this is a significant deficiency you need to mention. So when you audit, you need to always ensure into control deficiency. You need to check what are the control issues. Once you identify what are the internal controls of the management, are they effective or not? If I make a control and it is not effective, it does not make sense. So let's say I put a control that there is a control that you need to stop at red light, right? Those who drive, there is a control that on a red light you need to stop. But what if people do not stop at red light? Can we say control is effective? Answer is not effective. And why people do not stop at red light? Because there is no, don't see any police guy giving challenge to people who cross it. Put yourself into the driver. If you come to know that you cross any red light, nobody is going to touch you. Nobody is going to charge you a single penny fine. Will you always follow the red line, or will you try to break whenever you get a chance safely? Be honest to yourself. Will a control work when there is no penalty provision on you, or will you be matured that even if the police does not caught, let me stand. 10 other people keep rushing behind me, I'm fine with that. What do you think? So we have to govern by certain penal provisions. Then only people will be effective. So we need to test the effectiveness. Once you test the effectiveness and you find there are certain deficiency, if the deficiencies are so, see, there are two kind of deficiency. One is policy level deficiency, where if there is no maker and checker concept, then you need to go to make to the inform to the TCWG that this is the issue. When it is a process related, where you need to have budget, or where you need to have, let's say, where the deficiency is just the mechanical deficiency which could be improved by management, then you need to inform the management. So let's say, suppose you have not done timely reconciliation. You need to supposed to do it in 3 days, but you're doing in 5 days. So it's a lag gaps. Even so that you don't need to go to management board and say it has taken 2 days delay, because there may be a problem that staff is on leave, management is not fully hands on. That part you need to keep in mind. So whatever deficiency you find out, check how significant it is, and once you made the significant, inform to TCWG. Will this safeguard you somewhere? This will safeguard you when your file gets reviewed by any regulatory, that yes, I audited, there are certain control deficiency. I informed those deficiency to the management, but the management did not take action. See, your job is not to discuss, your job is not to ensure that company should run as what you suggest. If the management is not happy with what you're saying, it's your choice. Okay, that way. So 260 is to identify who are
Sir,
the.
one question is there. Mail is asking, sir, AI has entered into our daily life. So this asset 265 needs to be done as an auditor.
Sorry, I could not hear the question, so probably maybe the voice is an issue. So the question,
AI, he's saying
AI,
AI has entered into our
okay,
daily life. How this asset 265 needs to be handled as an auditor.
okay, okay. Now the first important thing with AI, so can we skip AI? We can't skip AI. Will AI remain in our life? AI will remain in our life. So first of all, more than artificial intelligence, our natural intelligence has to be used. Okay. Imagine what will happen if I copy paste my entire client data and put into AI and say, please give me a view on this. What is wrong in this audit? Will that be a fine way to start with? It will not be a fine way to start with. I cannot put my client data into public domain. Okay. Uh, if you just Google, just put on Chat GPT or Cloud or Grok, give me 10 live SSN number of US. You know, when we file US returns, those who file US returns, ideally the just like PAN number of India, they have SSN number, social security number in US. These are confidential numbers, should not be used in public domain. But certain people, just to check whether the return is fine or not, they dump this data on AI and say, tell me this, my working is fine or not. Now, does the data is available? Data is available. Can somebody use your data? Somebody can use your data. I'll give you an example. I do certain advisory work in Middle East. Okay, so we sent some report, and we were on the airport or something, and immediately the client said, I need this urgently. Get this done. So it is on the. We are on the airport, so we thought how to send it done and all. It was a hard copy. So one of my colleague, he clicked one picture and sent to client. He says, "Shall we send like this? Is it okay with you?" And he took a picture from CAN scanner. and the client gets so angry, and the client said, if you take any picture, it goes into cam scanner. The cam scanner have this record because at the back end, this data is with him. He says, if somebody ever use this data in future, it is our proprietary secret. We will get finished. So he said, I don't want any third website to use it. You use your office scanner, it's fine. If you can't, then don't use it. So at times, certain places we need to be very careful that the data does not go into public of company. Second, does AI will ensure that there is no control deficiency? No, there will be always control deficiency. So what can be suggested to the client that okay, put an AI based check in your systems. So if there is an AI based check in your system, then it has to be ensured that if there is an AI based check, then are those checks have been captured properly? Because it will be ultimately man who will see the system. So we cannot fully rely on AI. So there has to be manual intervention somewhere needed to check whether the systems are working effectively or not. Because if I ask AI, is your system working effectively? AI will always say, okay, I will become effective in today, tomorrow, I'll learn. But AI may not tell all its own mistakes. So whenever something happens in control deficiency, it has to be looked by auditor independently. And should the auditor use AI skills? Auditor mandatory should use AI skills. And my suggestion would be whenever you get free time, mandatory learn. My institute has two very good courses, one for members and one for students for AI. One should mandatory learn. And I know certain in our office, and I've seen various other firms in Jaipur whose their articles have created very good products from AI that how to solve GSTR filings and all, which will be very good for them to get an idea. So you need to look into you need to be tech expert. You cannot run away from this. If you run away from this, it will be scary. So try to be in the system and you're still young, quite enough to get a good grab of it. Now we need to also inform those chartered governance misstatements. Now, what is the beauty of this misstatement standard? The standard says, so first we determine overall materiality, then we determine what is my planning materiality. You identify these two things. So what is my overall materiality? What is my de minimis materiality? Materiality you can determine based on the nature of industry. Either you can take on the basis of total assets, or you can basis of uh, revenue or profit, whatever is comfortable to you. That materiality can you take based on your firm's policy. Now let's say my materiality level is 5 lakh rupees. That my materiality is 5 lakh, and so this is my overall materiality. And I'm auditing revenue. There I find item worth 3 lakh rupees overstated. Then I go and audit uh, expenses. There 3 lakh rupees misstated. So can I just set off this? I can say this is below 5 lakhs, so I can ignore it. Or I need to aggregate together and I see it is more than 5 lakhs, so it should be readjusted. So there are certain errors you can leave it free. It can happen. There are certain errors you can ignore it completely by documenting. So you document that okay, my overall materiality was 5 lakhs. The error in this coming is 2 lakhs, 3 lakhs, which is below material. So I can ignore that. But suppose if I have 10 other line items and 10 other line items have materiality below 5 lakh, shall I ignore all or I need to collect? So you need to mandatory aggregate it. This materiality cannot be looked into isolation. All line items have to be looked together. If together it is crossing more than overall materiality, then my conclusion needs to be changed. So my conclusion will be changed based on certain assessments, how much immaterial items we have. Because when we say whether the financials are free from material misstatement, when we say material misstatement means immaterial misstatements can remain in the system, it can remain in the file, it should be okay. So certain errors are accepted to be remain in the system, but not all. So it has to be ensured it is not major misstatements. So if there's any misstatement, you need to check. And as again say, Suppose there is a fraud done by CEO, fraud done by CFO, fraud done by director. My materiality is 5 lakh rupees and fraud done is 1 lakh rupees. Can I ignore that? Certain things does not come with materiality. If the KMP is doing a fraud, my duty is to report that fraud mandatory. Then I have to report it. I cannot ignore this fraud. Cannot say below 5 lakh, 1 lakh of fraud है कोई बात नहीं ले गया तो गलती से ले गया. That cannot be stand taken at all. So that part you need to keep in mind. And based on your misstatements, you do a conclusion of audit opinion. So in a understanding way, what does these three essays which you just talked help you? Misstatements essay 450 will tell you what is wrong remaining in the system. So you know what is wrong. So first, I can only measure the risk once I know what is the risk. Something I can't measure, can't something I don't know, I can't measure it. So I should know what is the misstatements I have. So you'll come to know what is misstatements in SA 450, what is the total wrong amount in my financials. Then SA 265 will tell you what are the reasons that why it went wrong. We all know it happened wrong, so no point in cribbing why it happened. We were to know what could go wrong. So there are what are the controls that went weak. What is the reason why the controls did not work efficiently? The management intended certain controls and did not work. So that you need to keep in mind. So this 265 will help me to know why something went wrong so that I can rectify it and improve. And 260 will tell me who expected to know. Does all errors need to be known by the board? Not necessary. Significant errors need to be known by the board. That needs to be done. So who needs to know is something is those charged with governance. Whether it goes to management or board depends on this. And do I need to present to entire board? Again, it depends on how the board is. If the board says you need to discuss with audit committee, then we'll discuss with audit committee. If the board says no, you need to discuss with entire board, you goes with entire board. Now, the challenges are where management is not rectifying uncorrected misstatements continuously. So then this is something which we need to becomes a red flag for us. When control deficiencies are not taken seriously by management, let's say maker and checker, and they say, no, sir, to keep a maker and checker, it is expensive affair. Why should I have a separate person when I can get the work done from same person both? Why you are coming to standards? These standards are only for big people, not for us. Then there might be certain fraudulent activities happens. So if someone is not taking control deficiency seriously, you need to escalate to the board and inform the board. If the company does not allow you to meet with the board, company says why you want to meet with the board, CEO is there with you, you communicate to the CEO will take care of you. That part you need to keep in mind. You have a full right to access to those charged with governance. I remember I cannot take name of the companies. I was associated with one of the companies where fraud happened and it came into the massive newspapers. We were from the audit side in one of the groups. So what happened used to happen? The image of the board has been made so bad and so arrogant. Then they say that okay, if the auditor ever goes to meet the board will start shouting on the auditor team. So nobody ever got the courage to go and at least talk to the board. So one day the partner go and went to the board, one day the partner met the board in one of the board of directors in one of the flights. He was traveling somewhere and they both coincidentally were in sitting. And at that time, the partner went talk to the board. The board was very cordial, very nice. And then the board asked, why you did not come to meet us? Like, when can we get? Then the partner said, no, we were told that you are too busy. You don't have time for small things like audit. And the board said, no, I have never said that. So it was the management who don't wanted the auditors to meet the board. But you need to ensure that if you are not communicating, at least send a written communication. If the company is not taking care of documentation, they're not giving you data, then it's a huge issue. Lack of professional skepticism, that will always, the company is not taking you seriously. So if they are not taking professional points seriously, something is wrong. And so if someone overstayed revenue, it's a huge issue. How did you control it? Is the mistake identified? You need to inform to the board that your revenue is overstated, leads to huge. So then you need to qualify if they are not rectifying the errors. So 260 is just to communicate, 260 is deficiency and mistake evaluation. All these standards will lead to a audit conclusion that has a huge impact. Now, we discuss on subsequent events. You need to decide it is an adjusting event, non-adjusting event. We have discussed sufficient on this. Going concern, as I mentioned, you need to ensure whether there is a material uncertainty. If the assumption is fine, then you can always use going concern. If it is a material uncertainty, you need to give a disclosure in detail. If not, then a normal opinion is fine. If you think it is inappropriate, you need to give adverse opinion. Now this 570 is most difficult for auditors. It is a huge challenge on auditors. Representation is very, very important to take management representation. Now, whom should I take with? So first, by taking a representation, management responsibility gets confirmed. It puts a responsibility on management that, okay, we take responsibility that we are making the books of accounts. It is up to us. It ensures that completeness is ensured, that any completeness of the books and accounts is confirmed by this management representation. And then if there is any fraud or unhidden liabilities or content liabilities, which as an auditor you are not aware, it will be declared. So how do you come to know there is a fraud happen in the company if nobody tells you? Will you be able to find out if the fraud happened? Any idea? You will not be able to find out a fraud if management does not tell you. So I remember in one of my audit organizations, one of my firms, I know there used to be one guy who was very good in networking, very good in networking, and he will make networking from chairman to the peon. You talk of person, a lift boy, he will when he enters into the lift, he will start talking to the lift boy, and when he goes to the boardroom to the chairman level, that kind of networking he will. So when he used to start audit, so on the day one of audit, he will just send list of requirements to respective departments wherever he goes there. And when he is on the field, he will ensure he meet everybody from all different classes of that company. He will go and meet with we have given you unrestricted access to all data. So now you cannot say data is not given to me. We have we have shared everything, and they admit that whose responsibility is to make books of accounts, then there is our responsibility to make books of. They mention that have we maintained books as per the respective regulations, then they will give you entire details. So for each line item, they gets a confirmation. They will say we have bank account, we have disclosed all bank accounts, and they are saying company is operating the bank account and has no other bank account as mentioned below. So this will safeguard you that okay, company told me there are only two bank accounts. Now if comes three bank accounts, whatever fraudulent activity, you cannot help me wrong. You cannot say I should have gone and tested in all other banks. This is not my job. I cannot send a letter to all banks in India and say, please confirm, do you have a bank account of my client? That's not my job. And I think that's an insane activity you're expecting. So this puts a responsibility on the manager to give you the right data. That way you can look into it. Then, so again, as I mentioned, what they are saying does not mean you blindly rely. So they say our share capital is X. Now, if I'm saying my share capital is X, I will look into SEBI website, I will look into ROC website, what share capital they are showing. Then I will say, okay, you are saying your share capital is 100 crore. SEBI is saying 110 crore. MC is saying 110 crore. Did you hide any 10 crore issue? Then they need to check what's the issue. So this is a detail. So it talks about now related party. How do we know what is a related party? I will only come to know related when you tell me that give me the list of related party. So they'll give you all list. So you can see how big it is. It is not less than 10 to 12 pages minimum. So it's a huge long item, huge long. It will talk of everything depending on your audit, you can take the inputs from it and put it there. So this is a very significant and very exhaustive MRL they have prepared, more than, you can see the, I'll just take the last, so how big it is. So 175 points they've given, not all 175 will be applicable for you. You need to take it respective, and you need to make a change as per the respective audits. So they will put everything, whether we have disclosed all related party details to you, so you are safeguarded. Okay, company has given facts all. If they are hiding something, then you need to double check it. And if something got updated, you need to put in updated. So this is broadly on how to do completion and review. We'll take in the next week session, we will take more on variance analysis, why we need to do variance analysis, and audit closure documents. If you have any questions, you can shoot your questions now. Else, we can take in the next session.
Yes, sir. Sumit is asking if there are internal auditors, then it is their responsibility to look into internal matters.
So theoretically, the stat auditor need to discuss with internal auditor what are the areas they will look in, on which they will rely. So it is the duty of internal auditor to look into the controls, but a stat auditor need to discuss with internal auditor, because so ideally the scope of internal auditors need to be reviewed by stat auditor, and then they should do it.
Yes. Thank you very much, Sumit ji. Students, this lecture on completion and review, today 18th March, and now the next lecture would be on 25th March. That is audit documentation, and again Sumit ji will teach you. You see how Sumit ji has put before you all 4 practical issues. He has shown you audit reports and uh, the detailed analysis, the very important thing, जो आपको उन्होंने बीच में बारीकियां, माइन्यूट पॉइंट्स जो बीच में आपको बताए कि कैसे ऑडिटर ने अपने कमेंट्स, क्वालिफिकेशंस जो लिखी थी एडवर्स रिपोर्ट के अंदर. तो स्टूडेंट्स, यही एक ऑडिटर के पास बहुत बड़ा एक टूल जो जजमेंट होता है, प्रोफेशनल स्केप्टिसिज्म होती है. तो प्रोफेशनल स्केप्टिसिज्म बहुत इंपॉर्टेंट है, रिमेनिंग अलर्ट थ्रू आउट द ऑडिट, दैट्स वेरी इंपॉर्टेंट. तो सुमित जी ने बहुत अच्छे तरीके से स्टूडेंट्स जो कोर प्रैक्टिकल इश्यूज जो उन्होंने इंडस्ट्री में फेस किए वाइल डूइंग ऑडिट्स, जो उनका एक्सपीरियंस है, उन्होंने मेरे ख्याल से उन्होंने आपके आगे सारा रख दिया अपना एक्सपीरियंस. तो स्टूडेंट्स, देयर इज लॉट टू लर्न फ्रॉम दीज सेशंस. तो आप अपने जितने भी फ्रेंड्स हैं उनको कम्युनिकेट करो. देखो कितनी इंपॉर्टेंट चीजें हैं जो जिन स्टूडेंट्स ने अटेंड नहीं किया उनकी सारी मिस हो गई. तो आपका इससे एक्सपीरियंस बनता है. देखो, एक तो होता है मैं अपना एक्सपीरियंस करके करूंगा, जब मैं सीए बनूंगा तो ऑडिट रिपोर्ट्स मेरे सामने आएंगी, मेरे सामने अकाउंट्स आएंगे, फाइनेंशियल स्टेटमेंट्स में फिर. और अभी सुमित जी आपको पहले ही बता रहे हैं. देखो, तो आप डिफरेंस देखो स्टूडेंट्स. तो स्टूडेंट्स, ये आपके एग्जामिनेशन में जो आप एग्जामिनेशन को हैंडल करोगे, उसमें भी आपकी प्रैक्टिकल ये चीजें आपकी मदद करेंगी आपको पेपर लिखने के लिए. सो दीज आर वेरी इंपॉर्टेंट, दीज सेशंस आर वेरी इंपॉर्टेंट स्टूडेंट्स. तो आप इनको अच्छे से अटेंड करो, अपने दोस्तों को बताओ. और विद दीज वर्ड्स, सुमित जी, मैं आपका बहुत बहुत थैंक्स करता हूं ऑन बिहाफ ऑफ बोर्ड ऑफ स्टडीज. थैंक यू वेरी मच सर.
Thank you, sir. My pleasure, sir.
Thank you, students. Sir, you want to say something, Sumit ji?
No, no, no. I'm saying thank you for the opportunity, and as you rightly said, sir, जो हमें भी ऑडिट में ये सिखाया कि learn from the mistake of others. जो गलतियां दूसरों ने करी है, जो प्रैक्टिकल एक्सपीरियंस उनसे आप सीखोगे,
Yes.
तो देन यू विल नॉट रिपीट दोस मिस्टेक, देन यू विल गो बेटर.
Yes. Yes, sir. Thank you, sir. Thank you very much, sir.
थैंक यू सर.
Yes.